From AgriPoint, I'm James Kotecki, and this is The Point Cloud. On this show, we talk with leaders at the intersection of technology, agriculture, climate, and the natural world. My guest today is an investor in that natural world, Megan Riley Caton. She works at Climate Asset Management, which is a leading natural capital investor. They've raised $1 billion for different strategies, and Megan looks after one of them, which is designed to deliver carbon credits and returns. Megan has over 20 years of experience in development, finance, and investment management across 5 continents. So I'm really going to have to work hard today to make this interview one of the highlights of her life. But let's give it a try. Megan, welcome to the Point Cloud.
Thank you for having me.
Megan, why is the natural world important to you? Before we get into the whens and whats and hows of investing, why is the natural world something that you care about?
There's a phrase in Spanish that says, we aren't the people who fight for nature, we are the nature that fights. I think we are fundamentally a part of the ecosystems and that we live in, and everything is interdependent. I think I've always had a strong sense of the resources that we use and the footprint that we have on the natural world. And I think I've always had a strong sense of the footprint of the food we eat. I've been a vegetarian since I was 10, and wanting to leave a lighter touch, a lighter footprint on the earth.
And this may be obvious, but do you find that your stance here is in stark contrast with maybe the majority of people we come across, which maybe don't think of us as part of the natural world? It seems like kind of something separate, something out there, especially maybe people who are urban dwellers, people in tech, what have you.
I think it's very natural to exist in a bubble, and it's very human to want to control your natural environment and to feel that you can. And it's really scary to think that you can't, right? If you've gone through a natural disaster, an earthquake or a tornado and realized that the natural world is bigger than you, I think that's really frightening. I think it's also humbling and inspiring to think that you're a part of it. But yes, I do think I wouldn't say that I adhere to it perfectly either. I'm a resident of Brooklyn, New York. I have a pretty decent sized footprint on the earth, and I'm an urban dweller. So I don't know how possible it is. I haven't embraced the tiny home movement or moved off grid, living in a yurt. So I understand that it's somewhat incompatible with the modern world. But I think it's really important and really increasingly important for us to acknowledge that we are a part of the ecosystems that we reside in, and that they have limits, and that it's in our interest, if we want to sustain human life, that we respect those interests and we invest in regenerating those ecosystems in addition to leveraging them for our own personal use.
So let's lay some foundational concepts here. When you say invest and investing in the natural world, what does that word actually tangibly mean in this context?
For me, it means putting active, purposeful effort into creating tangible, positive benefits for nature, for climate, for communities. It can also mean creating those benefits for investors. So if you're putting money in, seeking to get something out that is of greater value than what you put in. That's what it means to me.
When we say invest, we typically still are talking about taking some money and putting it in some kind of investment vehicle, and that vehicle buys certain things, right? And in your case, we're talking about nature, so we're talking about trees and other kind of natural assets, right?
That's correct.
So then tell me about how it actually works at Climate Asset Management. Is it as simple as that? Like someone gives Climate Asset Management some money, Climate Asset Management goes out and buys some trees, and tell me about what the return looks like, what kind of investors you have. Just kind of give us a little bit of a 101.
Sure. Very happy to do so. And just to be clear, this is not, we're certainly not marketing any product today. Our funds are all closed. When Climate Asset Management, our approach to investing in nature is to invest directly in projects. So we're an investment manager, which means we raise external capital from our limited partners. Those could be institutional investors like an insurance company or a pension fund or family office, or they could be corporate investors that may be seeking a financial return or something else in kind, which in our case is typically a voluntary carbon credit. And we raise that capital into specific strategies that are seeking to deliver certain attributes that are attractive to those LPs, limited partners. And really fundamental to our approach, because we invest only in nature, is that all of our strategies are designed to be long-term. So 15 plus years. And the reason that's important is that when you are transitioning land use, our transitioning land management, it takes time. It's not something you can do overnight. In that sense, it's potentially very different from a tech investment. We're subject to the laws of biology and physics and growth rates of trees in certain areas. There's only so much that you can do, and you need to be prepared to be patient capital in order to deliver the long-term value of those assets. And we invest directly in projects. So we do not invest in companies and we do not invest in funds. So we are exactly, as you said, specifically looking, depending on the strategy, to acquire land, to fund the acquisition and planting of trees, and to then sell products from those projects that generate returns. Those products could be ecosystem services like carbon benefits. They could also be tangible physical commodities, for example, nuts grown on trees or timber, or it could be a combination of all of the above.
You did mention voluntary carbon credits. Obviously, at least in the US right now, this is a voluntary thing. Is it possible that some future political administration, some future law or regulation changes things that would make this more valuable in the long run? And is that even something that investors may be expecting that 15, 20 years from now, this is going to be worth a lot more because this is now going to be required and we'll have kind of a leg up on competitors?
It's a really smart question. I'm very happy to answer. There is a general sense that the voluntary carbon market is a precursor to a eventual regulated compliance carbon market. And regulated compliance carbon markets take very different forms. So the EU emissions trading system, for example, trades allowances or permits to pollute. It's not currently possible to sell a solution, so a carbon removal credit into the ETS. But you have other markets, for example, the New Zealand emissions trading system, where you're able to purchase and sell carbon removal credits from forestry projects. And those are fungible on a one-to-one basis with your emissions permits. So compliance markets take many different forms. And, the hope for a global compliance market is probably faint at the moment, given how things are evolving. But the voluntary carbon market is a precursor in two, I think, really important ways. Number one, it's a bit of a sandbox. So you're testing out what are other project activities that deliver value in carbon. How do they deliver value? How do you deliver them in a way that's cost efficient? How do you do the monitoring, reporting, and verification in a way that allows these projects to be economically feasible? How do you ensure that the projects have the transparency and the integrity we need for investors to have faith in them? And how do you decide all of the rules, the myriad rules around what claims you get to make based on what particular project you may have supported? All of that work is being done in the voluntary carbon market space, and it really serves to inform compliance market direction over time. You can see that right now in the EU, the CRCF, the Carbon Removal Accrediting Framework, which the EU is developing, is taking into consideration existing methodologies and approaches in the voluntary carbon market to inform the eventual design of that market. I think the other way that the voluntary carbon market informs compliance markets is in explicit linkage. So you're seeing, for example, in Asia in particular, compliance markets moving to allow the use of certain voluntary carbon credits as a compliance instrument. So I think the convergence of those two markets is something we could expect over time.
And so then how do you evaluate the projects that may be presented to you as potential things that you can invest in? Because it strikes me that you're actually in a really unique and interesting position to answer this question because you need to look at this from a little bit more of maybe a hard-nosed lens, like you're trying to deliver something for your investors. And so how do you evaluate projects?
Really good question. We bring I would say, institutional financial quality diligence to the voluntary carbon market space, just as we do on the natural capital side of the house. So we have our strategies are split across a natural capital strategy that's seeking to generate financial returns, a carbon credit strategy that's seeking to deliver carbon credits, and then the strategy I look after is seeking to do both. So we apply an institutional quality diligence across the board, which is something that I believe really strengthens the quality of the projects that we do. We're very active managers. We do a huge amount of diligence up front in order to be confident that these projects are likely to deliver the outcomes that we expect. And we look for projects that meet our quality criteria. and meet the criteria of the mandate. So, as an example, in the natural capital strategy, which is in the one that's seeking to deliver financial returns, we preference compliance carbon markets that have a proven track record because we're seeking to deliver financial returns and we are taking relatively little risk. So there, the majority of the carbon that comes out of that strategy is likely to come out of the New Zealand ETS, for example. Whereas in the carbon credit strategy, our limited partners have signed up to receive voluntary carbon credits. That's the product that they're looking to receive. So we focus our time on voluntary carbon projects that meet our quality standards and that meet the mandate. So our investors may have a specific view on the project activities that they would like to see take place. So that could be planting trees, but it could also be, for example, restoring mangroves or doing regenerative grazing. In general, our investors, our limited partners, also may have a view on the standards that we use, the methodologies that we apply, and we have a view as well. So we employ a fair amount of technical expertise to be confident that that the projects we're looking at are using the right methodology, that it's a methodology we believe will lead to a project with long-term permanence, that the project design supports long-term permanence. So we're not looking to fund a project that is, for example, just tree planting. We believe in tree growing, and tree growing takes time and takes involvement with the community. We're really looking for long-term projects that are designed to last. And that's something I can bring to the space. My background is in built real assets. I used to build wind farms, for example. There are a lot of parallels. These are physical assets. They're tied to place. They generate value over a 40-year period. You need to get along with your neighbors. You can't pick it up and move it if it doesn't work. You're generally, very high CapEx, capital expenditure in the beginning. So you're putting a lot of capital out the door, and you need to make sure that the project is structured well so that you're confident that you've mitigated your risks and that you'll get your return. And so we bring all of those perspectives to the work that we do. And we also, I would say, do a lot of diligence on our partners. We are not the people who are physically planting trees. We'll probably not be the ones watering them in 5 years if that's what's required. We want to know that we're working with partners who are aligned with us in the mission of what they're seeking to deliver, and also that the project is structured in a way that all of the incentives are aligned. So towards project success for all the stakeholders involved.
So you're talking about this very high level of diligence. And I don't want you to, cast aspersions on other people who are trying to make the world a better place. But just from your perspective, and I'm not even sure if I'm phrasing this correctly, but like how much more diligent are you than others that folks might come across in this space? Because from one perspective, someone might just kind of look at this and say, oh, it's voluntary carbon markets. You said it's a bit of a sandbox at times, right? So is there a sense of, some folks out here are kind of still operating in a Wild West fashion or maybe making promises that are too bold? I just want to understand kind of the context within which your very high level of diligence is happening.
It's a really good question. I mean, I think it's really important to remember that the voluntary carbon market in 2020 was a $300 million market globally. That's minuscule. By comparison, the US mitigation banking market, which is the largest and oldest biodiversity market in the world that most people have never heard of, is probably 5 billion. So it is historically a very small market. It was created by NGOs, held together with sellotape, and there just weren't the resources to do the diligence at the level that we are able to do through the support of our LPs. So whether that's diligencing partners' requirements around anti-money laundering, or looking at the legal requirements in country, or doing significant technical diligence. We'll sometimes have 3 different technical providers diligencing things like the allometric equations that are used to predict carbon delivery through species growth over time. We do climate risk assessments, right? So I think historically there just hasn't honestly been the resources available to do this work. So in that sense, yes, we're different, but we're probably riding the tide of folks who are willing to, the folks who are willing to put capital in, the folks who understand and are aligned with the broader flight to quality that's happening in this market, have realized they need to spend money in order to get delivered a product that meets their needs. So I think in that sense, we are aligned with the direction of travel, and I think leading it. Separately, I would say there's a lot of confusion in this market. It doesn't make a huge amount of sense. It's not easy to understand from an outside perspective. And so what I find in this market is that people think it will be easy. People have a different sense of what things mean. So they say, oh, yeah, there's a methodology. You plant a tree, you get a ton of carbon. It's pretty straightforward. And it's like, no, have you actually looked at VM47, Verra's most recent ARR methodology, which is ARR stands for afforestation, reforestation, and revegetation. It's incredibly complex. It's really, there are folks who would say you have to write and defend a PhD thesis 3 times to get a project registered these days. So, and I think there's just a sense of, I, I guess I would say naivete sometimes about this market because people perceive it to be a bit Wild West, or they also perceive it to be pretty straightforward. I mean, you plant a tree, it grows, you must be removing carbon, right? It explains itself. And so people will say things like, we're going to issue credits, right? Not really understanding the work that's required for that to happen. And so, again, I think that's something we bring to the table being specialists. We understand that that's what's required. So we interact with folks who say, oh, we're going to register this project in a month. And we can look at them and say, no, that's actually not going to, we know that's not going to work because that's not how the system works. And the project's not developed to that stage. And we can really work and partner with those projects that are at an early stage to bring them forward and get them ready for issuance because we have that expertise. And, not a lot of people do. Again, really, really small market. I think you need to understand how it works. And certainly, all of the press and drama, for whatever reason, this market attracts a huge amount of sensationalist stories. And, that can often lead to a lot of confusion. And honestly, at the end of the day, to dissuade people from participating because they are doing this voluntarily. They're typically doing it with good intent. At least the buyers are. But if that just leads to negative press coverage, why bother? So I think that can also lead to a fair amount of confusion, which, I suppose we benefit from in the sense that a lot of our investors are really looking for institutional quality, long-term expert management, which we can bring to the table.
Do you ever see controversy in the very idea or concept of investing in nature in the first place? And if so, does that actually impact the work that you do?
I do see that controversy. There is very much a sense, which I agree with, that nature is priceless, and putting a price on it is vulgar, as Sir Dasgupta said in a landmark report in the UK a few years ago. And I think people get really uncomfortable with the idea that nature has a price. Um, and I think there's also very much a sense that nature has an intrinsic value apart from humans, right? When we talk about natural capital is usually defined as the capital that nature offers that delivers value to humans. Well, why does nature need to be defined that way, right? It should exist in its own right. And again, we're a part of it. Back to our sort of the beginning of our conversation. The challenge that we see in our space is people who feel that you should always manage nature for nature's sake, in which case you wouldn't be generating financial returns, or people who feel that if you're seeking to do that, you aren't generating sufficient financial returns. We've seen both perspectives when we talk to investors. I think the response that I would typically give is the public purse and sort of the available capital that we have at a public level to preserve our ecosystems is just insufficient. And the private sector is very much involved in nature. Agricultural companies and others, their whole supply chains depend on it. Everything we do is dependent on nature at the end of the day. Keeping nature somehow out of our commercial economic system, we've seen the impact that has. So I'm very much a strong believer that the private sector can be a force for good. And we need to understand the importance for the private sector of investing in nature restoration to sustain their businesses and to sustain themselves and the communities that depend on that nature, which in the long term will sustain the economic system as well.
I know that some of your investors are tech companies. And so, obviously, without getting into anything too confidential here, can you tell me just in general how the tech industry approaches this kind of natural capital, this kind of investment, compared to maybe other industries? I mean, we might think stereotypically of tech being a bit forward on these things and having that kind of climate positive view. Is that correct?
It's absolutely correct. I think as an American in a country that, does not have a national carbon market, the tech companies, the US tech companies are really leading the field in defining what quality is in the voluntary market. If you look at Microsoft, for example, it's very public about their efforts. And I'm really grateful to them for it. It is, at the end of the day, voluntary. Certainly I'm sure supportive of them having a social license to continue to do the work that they do, particularly with increasing energy use as a result of AI. Um, but in my experience, having worked directly with a lot of these companies, they set the quality bar very high. A really good example is there's a project activity called improved forest management, which essentially means you look at a forest, you define a baseline, which is the harvesting regime that would take place in the absence of a carbon market. You make changes to that. Usually you're harvesting less in order to generate carbon avoidance credits, which means essentially the carbon that it will no longer be emitted because you've changed your harvesting practices. I have, within the last year, seen a tech company request that the baseline be set higher. So there are fewer avoidance credits, for example, to contribute to that project's overall integrity. That's entirely voluntary. And they're typically willing to pay for that because they understand the consequences to the project developer. That's not required, right? At the end of the day, this is voluntary and they could be getting by with a minimum. And that is just not the approach I see. I see people putting in a huge amount of effort to get this right. There's a very strong sense of responsibility because they understand the position that they have in the market and they want to do the right thing. Um, so I think they also, as part of this work, will put themselves in a place where they're solving problems that wouldn't normally be theirs to solve. So a good example is, they're a corporate procuring something. When a tech company buys, staplers, right? They're not investing in the stapler factory up front so that the stapler factory can be created and buy all of the materials and make staplers for them. But they do that for carbon projects, even if that's not their preference, because they have to in order to get the quality that they would like to see. So they're putting capital investment up front, often for 10, 15 years, which is an incredibly long time for a corporate treasury. In terms of what they're adding to the space, they're helping to figure out how these project activities work, right? So helping to test new technologies, helping to test project activities, learning new things. We assumed the project would develop in this way. We put the money in, it actually developed in this way. And they're sharing those learnings generally pretty transparently with the public. And I think that helps us all understand how nature-based projects can work better, which benefits everyone, even if you're not participating in the carbon market, because there may be a day when we need to restore some ecosystems in order to preserve agricultural value or supply chain value for a corporate or resilience for a community. And they will have contributed to really understanding how these interventions can deliver results.
And your investors are still committed to this for the long term, right? This is not necessarily tied to any one political administration or kind of where the issues are in the moment.
Absolutely correct. We see our investors, they've committed to us for the long term, for the life of our strategies, and we see them continuing to engage in this market.
Let's talk a little bit about measurement here, which is obviously something that is near and dear to AgriPoint's heart. How are you measuring the results of and the progress of these projects? And of course, from an AgriPoint perspective, I'm really curious about how technology plays a role in that measurement.
Really, really good question. The technology has evolved so much, even just in the past couple of years. I actually, in longer ago than I would like to say, when I was in college, worked at a Center for Earth Observation, and some of the early efforts to use remote sensing to understand the planet. So to predict a plague, for example, when you would see deforestation occur near people's homes, you could predict movement of rats and then potentially public health vectors. Really, really fascinating. So I've been interested in this space for a really long time. What we see today is that remote sensing is an incredibly powerful tool for our projects in two particular ways. Number one is understanding historical land use, particularly where we have 10 plus years of historical land use records. That's important because there's certain land eligibility requirements that you need to meet for a carbon project. As an example, the area cannot have been deforested in the last 10 years because they don't want to encourage people to cut down trees and then get paid for planting them again. So you can use it to understand that, as well as any other historical land uses that may be relevant to the viability of the project. Going forward, we find remote sensing capability incredibly useful to get sometimes even weekly reports on progress of projects that you're monitoring. So if you look at something like a Global Forest Watch and other related technologies, they can almost count to a tree level the trees that are there. They can typically understand canopy height and various other things, which allows you, it's a very low cost way to keep track of project across sometimes a very wide area and to get alerts if something's changing so that you have the ability to intervene. Remote sensing has been an incredibly powerful tool. It doesn't do enough in the sense of carbon measurement, for example. There's still things that need to be done on the ground. It is not sufficient to evaluate grasslands. The signals that it provides are just insufficient to identify, for example, whether a grassland is degraded or not, or potentially its quality. And it's also insufficient from a biodiversity perspective to really understand what's happening in those ecosystems on the ground. So where I see the most exciting in innovations in the past couple of years, and what we leverage in our case, is in acoustic monitoring. So I was involved actually pre-climate asset management with a project that used acoustic monitors to identify bat populations and actually quantify the size of those populations in addition to identifying what species are there. eDNA is a really exciting development. It's not useful for all things. It identifies presence of species, not necessarily abundance, but particularly for ecosystems that have water running off of them, it can be a really efficient way to baseline. Say you're creating a wildlife corridor and you expect certain things to show up. Well, you can baseline what's there before you start, go back in 5 years and figure out what's there, and maybe find out that in our case, we have one project where we're seeking to restore habitat for the Iberian lynx. That's an efficient way to figure out if an Iberian lynx has been through your property. So that's really exciting. And, certainly, speaking of AgriPoint and similar technologies that are able to use phone-based LiDAR to quantify carbon and also do biodiversity species recognition, to me is incredibly exciting. So one of the challenges in carbon projects is dispersed areas of, trees outside forested landscapes, or working with smallholder farmers. It can be incredibly difficult to do the monitoring, reporting, and verification. If you have a commercial plantation and you planted all the same clonal varieties all in a row, it's pretty easy to go out there and figure out how tall they are and you know what you're looking for. If you're in a system where you're partnering with smallholder farmers who may not be as technically sophisticated, you're planting a variety of different trees, you're trying to mimic a natural forest, for example, it's just much harder. And so being able to give people on the ground technology that is pretty easy to use, and then support that with the technical assessment in the cloud to spit out results in terms of the growth of those species and the carbon that's present is incredibly valuable. So I find that gives us a huge amount of excitement. And I would also add in addition to measuring biodiversity, social impacts are also important. So we also see technology in fintech, for example. You can have carbon projects that offer payments or of benefits by driving an armored truck around and handing out cash. You can probably imagine some of the challenges that could create, particularly for institutional investors like us who need to track the money down to the recipient and are, I think, very concerned about potential misuse. So we see technologies in that space as well that are enabling digital payments that allows you to eliminate cash from the system. It gives the recipients more certainty about what they're going to get. You can also use that to allow them to predict if they do a certain amount of work, they may receive a certain amount of funding. So that can help them plan what they're seeking to deliver, and their participation in the project can help them develop a credit score and provide all sorts of other benefits. So we see innovation on the social side as well.
Is there a magic wand wave kind of technology that you would like to see inserted into this technological mix that you're talking about? Maybe some new thing, something that ties all of these things that you're talking about together. Is there something that's kind of on the horizon that you're looking forward to?
I think a platform that could integrate all of this information in one place reliably and efficiently and affordably, because we don't often have, the capital. If you're looking at a very high value agricultural system, for example, you may have the capital to invest in creating a digital twin and doing a variety of other innovations. But these projects are often, somewhat capital constrained and working in challenging environments that may not have full digital access or, even proper internet access. So I think something that's really designed for carbon projects that integrates the technologies I just described would be incredibly useful. And we do see it coming, again, as the carbon market becomes more relevant, as there become more customers, as the use case becomes clearer. innovators, entrepreneurs try to solve those problems and see a market. So I expect we'll see more.
And there's some combination of technology, standardization, regulation that creates a simplified layer of all this too, right? You're talking about previously in this conversation, you're talking about needing like a PhD to be able to understand any of this. When I just go buy a share of Nike, I may not necessarily even understand like fundamentals of investing, but I know I can just go out and buy that. And so I imagine that are you working towards a day in the future when, regular everyday people can be engaged on this on some surface level and the rest of the stuff kind of happens below the surface?
Would be ideal for everyone. I think that's one of the biggest challenges is the voluntary carbon market in seeking to always deliver the highest quality while managing uncertainty in natural ecosystems and interactions between nature and people that are sometimes hard to predict. Ties itself in knots, trying to be perfect. And when you see, for example, a regulated market like the New Zealand ETS, they, they essentially, when you plant a certain species of tree, the government tells you how many carbon credits you get. That's basically it. It's really straightforward because the rules are clear. And I think that is a world that we would all like to get to.
As we wrap up here, what's one thing that gives you hope?
What gives me hope is the people I work with, including our investors and, the young, very motivated team at Climate Asset Management who are really committed to the mission of delivering financial returns for our investors, long-term tangible benefits for climate, nature, and community, and proving that you can do both at the same time and that they're actually aligned in as long as you take a long-term perspective. That's what gives me hope. That's why I do this work. And as many as the headwinds are, I'm confident that, these are the people who are going to have the solutions when people come looking. And we're putting in the hard work to be ready.
Well, thank you for sharing your perspective with us today. Megan Riley-Caton of Climate Asset Management. Thank you so much for joining us.
Thank you for having me.
And that is our show. Thank you so much for joining us. Please subscribe, rate us 5 stars, and follow us on social media where the conversation continues. From AgriPoint, I'm James Kotecki, and this is The Point Cloud.